Welcome to Tech Ticker. My guest today, Chris Nelder. He's co-author of Profit from the Peak, as in peak oil, and an editor at Energy and Capital. And Chris, so again, you're a believer in the peak oil theory.
Absolutely. And
this idea that oil supplies are not keeping up with demand over time, and that oil prices are going to be on a continued path going higher, yes?
That's exactly right.
Okay.
I don't, in fact, I almost object to even calling it a theory. It's really a study of the fundamental supply curve of oil fields and oil-producing provinces. It's been observed in thousands of oil fields all over the world. We've got a very solid data history here which shows that oil production typically follows an irregular bell curve and reaches its maximum right around the point where about half the oil in a given field or a given oil province is consumed.
Well, what about this idea that, you talk to people on the other side of the debate, they'll say the world is awash with oil. We have Brazil just had a major find off the coast of Brazil. There was a study last week saying that there's 2/3 of the known reserves in the Middle East under the Arctic shelf, and we can get into the morality of whether it's right to drill there or not, but the reality is that there is oil. There's the Canadian shales. There's plenty of oil out there.
Yes, there's plenty of oil out there, but that's not really what peak oil is about. Peak oil is about the flow rate of oil. It's not about the actual volume of oil that's still out there to be produced. So we've reached a point right around 86 million barrels a day where we're at now, and it doesn't seem like we're going to be able to increase the rate of production much beyond that. The whole world has basically been about flat in oil production for about 3 years, since roughly 2005. And the analysts that I respect think we're going to have maybe another 2-3 years of this plateau at the peak, and then the global rate of oil production will fall. It doesn't really matter what's out there in terms of actual volumes in oil shale or Arctic oil or whatever. If you can't bring it to market in a timely manner and you can't bring it in a sufficient quantity, you're not going to be able to affect that rate.
So when the Saudis say that they can raise production, I think it's to 11 million barrels of oil a day, or to 15 in a few years, what is your response to that?
Well, they used to say they were going to raise it to 15, and then it was going to be 13, and then it was going to be 12, and now they're saying, we might not even get to 12, and we're probably not going to try to expand it much beyond that at all. They don't even intend to at this point.
All right, so Chris, so we got these big finds in Brazil. The Arctic Circle has tons of oil and natural gas. Now the U.S. looking like it might be drilling offshore and up in Alaska. What kind of difference is that going to make in the short to intermediate term for oil prices?
Absolutely nothing.
Zero.
Well, it'll mean nothing to supply. Whether that will affect the price depends on the market sentiment, depends on how confused the street is over what this new drilling really means.
Right. So when it does come online, say 8 to 10 years down the road, which is the most likely outcome.
Yeah, I mean 8 to 10 years to first oil, which is a tiny little flow. And then it takes about another 10 years to get up to a really significant flow rate, which at that point is going to be so far down the backside of the bell curve that it won't even make up for the depletion of the existing mature fields. So ultimately, I don't care if they're talking about Brazil's oil or Arctic oil or the Outer Continental Shelf or Anwar. It's going to make, even if you put them all together, it makes a little bump on the backside of the global oil production curve.
All right, so you said we have a $120 floor for oil prices here. Where do you see oil prices in 10 years?
That's impossible to say. If demand holds up, which is going to be primarily due to continued growth in Asia and the Middle East, then the sky's the limit. It could be $500 a barrel for all I know. If we have a major episode of global depression that sets in and demand really...
It may be a possibility, yeah.
It's a likelihood. Then I think oil will come back down when that happens. But at what point does that happen? When oil's $200, when oil's $300 a barrel, and then it goes back to $250? It's going to be something like that.
Okay, so the title of the book is Profit from the Peak. So if I agree with you, it's not a theory, oil prices going up from where...
It's a study.
It's a study,
yeah.
And your book is an exhaustive study, I think, of the whole
Indeed,
concept.
I was exhausted when I finished it.
So where are you, where would you be putting your money if you subscribe to this idea?
I think anybody who's in the business of producing oil is in a great business at this point. So the drillers I really like. I've been long on Transocean rig for a long time. Diamond Offshore is a very similar business, but Alice Chambers and, there's a lot of other oil producers out there that are in a long-term bull market. The world needs oil. There's a fundamental imbalance between supply and demand. They're going to need to produce every little bit that they can. And so the people that are in that business are going to continue to make a good profit.
What about the so-called majors in the business who you're omitting? I don't know if that's intentional or unintentional, but Exxon, Conoco, the Barron's this weekend had a story about that those stocks are cheap on a PE basis.
Right.
Would you avoid those type names, or?
I have always avoided the integrated majors. Part of my hesitancy to like them comes from the fact that I think they've had a real difficult time replacing their reserves.
Especially now because of the nationalization of petroleum in a lot of countries around the world.
Exactly. In fact, big oil is not so big. The integrated oil majors altogether control less than 10% of the world's remaining oil. And if they can't continue to replace their reserves at a higher rate than they're consuming them, then their fundamental value of their company is going to decrease.
Right, interesting. That may be why they're spending a lot of money buying back shares as opposed to doing
exactly
more
right.
E&P. Yeah.
They're not trying to expand their business anymore. They're basically trying to protect their shareholder valuation.
All right, Chris, thanks very much.